Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to what's supposed to be a weekly FX analysis video. The last few weeks, guys, I haven't been focused that much on it, and I apologize for that. Just the way things are with the stocks at the minute, it's madness. So I've really been focusing all my time on that, and I have had a few currency trades on. And to be honest, the way things are with stocks at the moment, currencies are probably the best place to be trading, guys. With the last crash we had there at the start of 2020, with the pandemic, the start of the pandemic, I wasn't badly affected by it because I was trading currencies at the time. But this time round, I'm 90% into currencies, and obviously I have my what I call my professional account. I've now got two professional accounts because the eToro account is there's $30,000 in there, guys. So obviously would like to do okay with that as well. Well, it's been getting battered. The saving grace for me is that obviously you keep an eye on everybody else, and keep an eye on the guys who are being followed and copied, with tens of millions of dollars, and they're not doing much better than me. So from that point of view, from a personal trading point of view, I'm not really doing too much wrong. It's the markets. Well, it's in a correction at least, guys. Whether it's a bear market or not, we'll have to see. But it could well be developing into a bear market. But that doesn't concern us as, put my other hat on as a currency trader. It's actually better times than it has been in the past because we're getting the divergence of economies. We're getting things happening that will move certain currencies in one direction and other currencies in a different direction. So there are a lot of good things happening from a currency point of view, guys. So I was actually sitting thinking the other day, and I thought, you know what, this is a better time for currency trading than the last couple of years where everything was about, the NASDAQ, the S&P, up, up, up every day. And it seems so easy to make money. And we were battling with trading currencies because everybody was on zero, or thereabouts. Everybody's interest rate was on zero. So it was very difficult to find trends. Should be easier now, guys. So I will endeavor to do these at least once a week, and possibly might go back to daily recordings, and just let the other side of the account work itself out, guys. There's no point in panicking. There's no point in selling at the bottom or near the bottom. There will be rallies. Maybe within those rallies, if you get something into the green, you might decide to take some money off the table. That's certainly what I've been doing. And then when it drops, and putting it back in again, and then it drops some more, and then you're doubting yourself. But that's the game, guys. That's what it is. There's the good times and there's the bad times. At the moment, we're through the bad times, but you have to take a long-term perspective on certainly on stock trading. Currency can be a lot faster in one day out the next. With currency, sometimes you can be in, a few hours and back out with a 5 or 6% profit. So anyway, without much or further ado, let's have a look at the week ahead, and then we'll review what's happened in the last 2 weeks, and we'll reset our targets for this time next week. Okay. UK, we'll look at the calendar first, guys. Although having said that, everything's dominated by Ukraine at the moment, and the sanctions that are being put on, dominated by inflation and potential interest rate hikes, and that's a crazy headwind to try and work your way through. But we'll have a go at it, guys. And the point I'm making here is that this isn't as important as what ordinarily it would be. The same with the pandemic. These numbers, coming out weren't as important as the fact that the economies were closed, you know. Okay, unemployment and employment in the UK coming out Monday morning. Um, Eurozone sentiment index, that'll be interesting, guys, because obviously sentiment won't be particularly good at the moment, particularly in Europe. Europe's getting battered at the minute with their links to Russia, guys. So much energy comes out of Russia, and you know, I've always had it in my mind: why are we buying fuel from Russia? Why are we buying gas from Russia? What happens when Russia goes rogue? You know, there you go. Um, United States PPI month on month on Monday as well. Then Tuesday we have core inflation rate out of Canada. CAD's doing all right at the minute, guys, with oil where it is. United States retail sales, and by the way, the United States economy is doing well as well, but obviously there's the concern about interest rates and inflation. And then with the FOMC economic projections and the Fed interest rate decision, let me just check the dates. We're the 12th, 13th, 14th. Sorry, that'll be Tuesday then. There mustn't be anything on Monday, guys. And then that's Wednesday. Thursday. Oh, well, let me pause you and make sure I've got my dates right here, folks. Yeah, that's correct. That's Thursday and then that's Friday. GDP in New Zealand then on Wednesday. Thursday, we've got employment and unemployment in Australia. Both in New Zealand and Australia have been doing really well recently. Dollars, Australian, New Zealand dollars. Bank of England interest rate decision. Be interested to see what they do yet again. We've got the inflation problem, but is that going to dampen demand and therefore, the higher fuel costs and sentiment going down? Is that going to naturally dampen inflation? Problem is, nickel went to $100,000 a ton. Madness. And finally, we've got gold moving, by the way, folks. Japan inflation rate and then Bank of Japan interest rate decision. Doubt they'll do much over there. Okay, that's a quick run through of what to keep an eye on for the week, guys. Let's have a look at the charts. Okay. We'll go out, let's say 4 hours. And just to recap, just in case we get any new viewers, guys, this is what we said would happen back in January, start of the year. Oh, January 21, guys, start of last year, we said the dollar would go long, but it would go long in a diagonal. Now, obviously, it's not exactly like that, and it's never going to be exact, but we did say it would go long in a diagonal. There was a possibility that it would just run flat, but once we'd established this, I think from around here, I was thinking, well, this is just going to keep going up, and got surprised by that. But as you can see, it's an ending diagonal, and from there, it's just kept going up, and that's the direction I've been trading it for over a year now, guys. It's not easy trading because, as you can see, in a diagonal, 2 or 3 weeks it's long, then it's flat, and then it's dropping, then it's long. And it can be scary. The last scare we had was here. If we go down to the 1 hour time scale with this, and I was trading dollar euro long here from in here as it started to push up here. And then we got Christine Lagarde come out, head of ECB, and said, it was quite hawkish, and the market made this move. I hung in and said, I'm not buying that. And slowly but surely we came back up into profit. I think around here I probably got out of it. I did make a profit on it, guys, and then since we just kept going up. Now the last recording I did was 2 weeks ago. We put this on and basically said, listen, long. This is DXY, by the way, and drew that arrow and said we'll get a correction, and then we don't know we'll get a correction, but it's what we look for. We're looking for a correction, and then if you get the correction, that's the point to then look to trade long, and that's what we got. come up into this area, has dropped off. Now, this is probably where I should have done my other recording, which I obviously missed. So we'll just move these guys, just take these off now. That's done. Now we're getting close to the target I put in from back here was 100. Now, whether we're going to get to 100 or not, I don't know. But we're starting to get to that point where you have to start thinking about this turning and starting to come off again, guys. I don't think we're there yet. But as you know, the market always preempts what's going to happen next. And it can be weeks, months, and years prior to something happening that the market predicts it. Then if it gets it wrong, it adjusts itself. But the next thing we will be expecting, and I've said this all along, guys, would be that, and obviously not necessarily an impulse. It could come down like that, but the next big move will be in that direction. But between now and when that happens, there's a lot to go on. Don't see it happening immediately. It'll probably not happen until there's a solution or an end game to Ukraine, unless it drags out to the point where it's just another one of those wars that everyone's lost interest in. Unfortunately, that's the nature of human beings, folks. Everything's tragic until the numbers are so large that people don't want to deal with it anymore. You know what I mean? If one child gets killed, it's all over the news. Once it's 100 kids a day getting killed, people have lost interest. I think they run out of energy of dealing with it, and they start to look elsewhere, guys. People just get used to things. So the big fear at the moment is that the war escalates and Russia comes up against NATO. I don't think, from a Russian point of view, they want to fight NATO. We saw how poorly they've operated against Ukraine. They don't want to come up against NATO, guys. They'll be annihilated. The problem is that they've got nuclear weapons. So obviously we don't want to, say we, I mean the West do not want to particularly escalate a war over there. So we're hoping the war stays in Ukraine. It'll be a war of attrition, and eventually the Russians will lose. It's about how long that's going to take. They will lose, just as the Taliban were able to, after 20 years, the Taliban were able to take over Afghanistan again. They lose through wariness, through cost, through populations losing interest. But the people who see themselves as occupied don't stop fighting. And you saw Germany occupied most of Europe, and eventually they were whittled down. And even if D-Day happened to happen, guys, the Germans would have constantly been attacked by everybody in occupied countries forever until eventually their empire collapsed. It's the same with them getting into Ukraine, guys. It's only 2 weeks, coming up to 3 weeks. Eventually they will work their way into Kyiv. The government may fall, but the people won't stop fighting. So it's going to be a long, protracted thing, unless Putin can somehow wangle a way of looking like he's won, and then pull out. This war's all about Putin's face. This is all about his emotions. So it will probably drag on. It probably won't get involved. Won't get any bigger. The way that it will get bigger is what's the word I'm looking for? Mercenaries, if you want to call it that. volunteers from all over Europe will pour into Ukraine. People who support Russia in Syria and places like that will pour into Ukraine, and there'll be a bloodbath in Ukraine. But I don't think it will go any further than that. I certainly hope it doesn't. So for me, from a stock point of view, and also from a point of view of when this happens, will be at some point when the world has got used to the fact that the war is going on and relaxed about the fact that it's not going to spread any further. How long is that going to take? Well, we're only 3 weeks in, guys. It could be within the next month, probably within the next 6 months. So, April, May, June, July, somewhere maybe midsummer, this will start to drop. Between now and then, the dollar will move into this zone. I don't know what that line is, guys. It might be the previous high. I don't know if it'll get that high or not. Possibly it could. When you take it out to the 4 hours, well, it's not the previous high, guys. I think it's the high from a way, way back over here. Yeah. Oh, hold on. Yeah. It's that high from way in 2017, guys. Don't see it getting that high. But you can see, I mean, I was looking at that, close up, and it looked like a diagonal. It's actually looking quite impulsive here. But what I had for this, and I'm dwelling in this, guys, because we can get this chart right. You can get some really good trades out of it. What I was saying a few weeks ago or over the last few months is, and I know it's a diagonal, and I know that's not an impulse, it's a zigzag, guys. But sometimes Elliot's not a pure thing, guys. It's more of an art than a science. But you can see repeated patterns. But sometimes you see something that looks like that, and it puts you off the correct diagnosis, as it were, because you see that, and then you say, well, it's not an impulse, and therefore it's not a 1, 2, 3, 4, 5. Well, it is a 1, 2, 3, 4, 5. Therefore, it is a diagonal. Now, I've been doing this a long time, but it's a long time since I read Elliot. I'm pretty sure I'm right in that should be an impulse, and that should be a zigzag, and then you get an impulse and a zigzag and an impulse. So that's what a diagonal looks like. But this is a diagonal, guys, without the initial impulse. The initial impulse was a diagonal, but it is the initial impulse was a zigzag. But when we were in here, do you remember this? Any of you who've been listening to me for any length of time, when we were in here, there were lots of people calling it to do that. And I kept saying that I wasn't going to trade it long until it broke that. Now, there were people that called that, and sometimes that would have been the right move, guys. But I just felt that it needed to break that before we got the next move up. And it was right. And I love it when I'm right, guys. Not from any ego point of view. Just it's a reassurance that you're not, talking BS. And there were some very popular people out there. I don't have a lot of followers, guys. I don't really know. Maybe you need to market. Maybe you need to talk a lot of bullshit. I tell the truth, guys. And sometimes people want you to tell them that it's easy. It isn't easy. It's easy when you're patient and you wait for the right setup. That's when it can be easy, guys. But it isn't just 1, 2, 3, 4, 5 ABC. It's not that easy. Okay, so we looked for that, and then I said we're getting impulse. We dropped, and as you would expect, impulse drop, impulse drop, impulse drop, and then it becomes a full wave, guys. That's what we're looking for here. So we got that. I would have loved to saw a little zigzag there and then traded it out, because that would have been easy. But we got that sharp pullback. That's why I got involved there, because I believed that it was going to go long. And then we got the drop, which looks like nothing at the minute, guys. But, oops, that's not what I'm after. It looks like nothing at the moment. But when you zoom in and you're on the 1 hour time scale and you've just put, a large position size on, and it drops like a stone within an hour, it can be scary. And you can put tight stop losses in, and I've moved away from tight stop losses, just drop leverage and increase my time period, guys, for trades, because I used to run tight stop losses and higher leverage, and then you're fearful of getting even a little bit wrong. So you put a tight stop loss, then you get it wrong, and the next thing you know, it's up here and you've missed the trade. So what I do now is I do my analysis on a higher time scale, and then if you get something like that happens, you don't panic, you don't worry about it, and then off it goes. So, by the way, I was trading euro dollar, not DXY on that one. So up it's gone. This is a fifth wave here now, guys. Hold on. We should get a fifth wave of this 1, 2, 1, 2, 3, 4, 5. And I know it's not beautiful, but that's what it is. And now we're in the equivalent of that, which could well be a flat, because you wouldn't expect another zigzag, guys. So it could well be a flat. It could do this for a few days. Maybe it then has to break that before you get your fifth wave. It could just be that, and then off it goes. We don't know at the minute. Personally, I wouldn't jump in long there. If it was in long from there, then I would move my stop to 0 in case it came back down. But if I'm not in it at the minute, I'm not going to jump in there. It can go from there, but if you jump in there all of the time, every time you see that setup, you're going to get it wrong more often than you get it right. Therefore, you don't jump into it. Wait to see if it's going to drop again, and then look for that. And it may only get to there. It might just get to there, but it could bomb on through. I suspect, unless something happens this week, some sort of ceasefire, I don't think it's on the cards, particularly not for this week. The Russians are on the outskirts of Kyiv. They're not going to, Putin's not going to surrender at this point. He's going to try and move into the center of Kyiv. He'll do it by hook or by crook. He'll bombard it. He'll bomb it. His troops will get in there. He'll take heavy casualties, but they'll decapitate the government, or the government will at least have to move west. We'll have to see what our old pal Zelensky does. They might have to evacuate. I don't see him doing it, but they'll decapitate the government out of Kyiv. And then he might use that as an excuse to go back to the Russian people and say, our special operation in Ukraine is over. We've made the independence. We've brought independence to the Donetsk. Sorry if I've got the names wrong, guys. The area in the east, and we've removed the Nazi government, as he's calling them, from Kyiv, and then just pull out. He might be able to do that, or put some puppet government in. It's a hard one to tell, guys. He probably won't do that, because I'm just thinking, if he pulled out then Zelensky would come back, and the Russian people would see him back, and then Putin would look like a muppet again. So it looks like he's in for a long drawn out war, folks. It's the end of Putin, no matter what happens. The same as Saddam Hussein went, the same as Idi Amin. He ran away in the end, didn't he? The same as Mugabe eventually. but he hung on for far too long. And our old pal in not Algeria, Libya, Gaddafi. They all go eventually, guys. Dictators always go. Okay, so this will break out long, guys. Either once it's put in, pulled back, it will break out long. Maybe it comes there, maybe it comes a bit further. And then I suspect it will stay strong up in this zone. As we were saying way back, guys, and we kind of said, well, the zone might be here, but it could be higher. I thought it would be higher. That's why I put the 100 target in. So it'll come up into this sort of zone. It'll run flat for a while, and then it may come off. If something dramatic happened in the with the war, if it suddenly ended, then you'd probably see it dropping quite quickly. Now, let's just go over to the euro, guys. And I know I'm taking a long time here. This is why we do it once a week or so. So I can use up a little bit of your time. If you look at the turning points, we'll go to the daily, of the dollar and the euro, they're quite sharp, guys. I mean, that ran, that's the type of thing I'm talking about. This was the opposite way around. This was the euro strengthening up, and then this was the dollar. Or I don't know if it would go to that, because that took a couple of years to work itself out. But it's that type of thing, either a short, sharp one and then it drops, or something that maybe lasts a few years. So in other words, we've come down to this zone. But even that, I remember trading through that, guys, and it took a few months. It took a lot longer than I thought it would. So we'll come down, maybe we hit there, maybe it goes a little bit further. We'll go into a zone, a flat zone, and then it'll start to come back up again, guys. Now, I don't remember exactly what that is. If we go down to 1 hour time scale, we might see it. No, I don't know what that was. Oh, no. I'm just trying to figure out what I was saying over here. When did I draw all of that? Oh, I drew that just now, didn't I? This is what I just drew, isn't it? Right, so from a few weeks ago, we were in here. Let's zoom in. We were in here and this was dropping. And I put that across there and I said, this is going to go short. There's the arrow. And then I said it'll get to a point and then it'll start to come long. Now, I still believe that, but the timing might be different. When I drew that, I wasn't necessarily saying it was going to come down to there and then it was going to immediately go long. But what I was saying is the next trade would be long from there. But we're going to have to move that. So that's still the next big trade for me, where you're getting into the start of a trade, will be in that direction. Obviously, this is something we're starting to approach the end of it. I still think there's push down probably into that sort of zone. Then maybe we get the sideways. Maybe it lasts longer, but it could obviously be something like that. And then it'll start to climb. And when will it start to climb? It'll start to climb either when Ukraine war ends, or there's a conclusion to it, or later in the year when the ECB starts to become a little bit more hawkish. They're already sounding hawkish, but they're not in a position yet to do anything about that, particularly with Germany, the way it is with its dependence on Russian gas and oil, folks. So that's what I'm looking for next. It's not a trade. There's no trade set up there, guys. Which is what we used to do on a daily basis. You can't really do a trade set up on a weekly basis. guys, you're just looking for it. So the next alarm will be there. We're looking to see if this pulls back. In other words, gives us a zigzag before it goes again. I'll give you that. And then it'll probably be horizontal, and then up we go. Okay, pound, same thing. Yet again, because it's been a couple of weeks, I don't know why I've got that line in there, guys. It's clearly a target of some sort. We're going to the daily when I might be able to. Was it a fib? Let's have a look. No, it's a zone. It's a zone. Let's take that up to, yeah, you see it? It's there and it's there. And I might have drawn it before the Ukrainian war. I think what I was saying here was the pound has risen against the dollar, but I think it will run flat. And then I was giving it a range. Now, why I picked that, I don't entirely know, folks. I can't remember now. I could go back and look up the recording, but there'll have been a reason why I picked that. Expecting it then to maybe do this. But we've had the start of the war since. Obviously, the UK being part of Europe, it's not going to get us hit as badly as the Eurozone because they're not as dependent on Russian gas, etc. But obviously, inflation is going to be the thing, energy inflation. So, Bank of England this week are making a interest rate decision, aren't they? Geez, on a Thursday. Yeah, there's it. They expected to put it up by 0.25%. So we'll see if that happens and maybe that pushes it up. But it'll be the same story with this, guys. I'm not expecting this to go away back down there. But certainly, it could push a bit more. Then we'll get a flat bit. And then as the dollar drops, it'll start to come back up. But I'm not going to make, I'm not suggesting you trade that. If you're in it and you're short, tighten your stops up, guys, and see if it keeps running. It should keep running, but you wouldn't want to jump in there, guys. Aussie US. Now the Aussie's been strong through this. They're not as badly affected as everyone else, and the New Zealand's the same, guys. But the other side of the world, they're not involved. Let's get this down to. Let's go to the 1 hour. Now, what I kind of said with this is not to trade it. As I say, the war has affected a lot of things, but the reason I said not to trade it was because I didn't see it going anywhere. I saw it continuing to do that. And despite the war, it continued to push up. You've had this little bit of a pullback. Maybe this pushes down some more, but I don't see the Aussie suddenly collapsing and it doing that, guys. That's not in the cards. So the Aussie against other things, certainly the last couple of weeks, there's been a lot of good trades. The Aussie against the euro, the Aussie against the pound, etc. But this one wasn't one of them. Maybe it drops down a little bit, but it's not something I would suggest you try and trade. And of course, it could be wrong, folks, but go for the stuff that's obvious. Now, what we were looking for here, which is surprising, was this to drop. And I think it was the same with the Aussie, actually. We got this drop. I thought maybe get a bit of a pullback and then another drop. But running flat, the trend's flat. Okay. New Zealand, because New Zealand was a little bit weaker than the Aussie over the last lot of months, I was looking for this to see if we got a completion of that impulse, zigzag, impulse. Maybe it comes to there, maybe breaks a little bit and then comes back up. It didn't do that, guys. This happened, and it's because there was a move into the New Zealand commodities, guys. Commodities have skyrocketed. New Zealand, Australia, Canada, obviously Russia as well, and South Africa, by the way. are getting big boosts of commodity prices, folks, which is the reason why we saw this move long while everything else went short. US CAD, same thing, guys, running flat. We said from back there it would move up, but we were only expecting it to come back up to there. Didn't quite make it, or at least it hasn't quite made it at the moment. Running flat, guys. We're on the 1 hour time scale here. This is running flat. So we were looking for it to run flat anyway. Maybe if it gets up to there, you could look at maybe trading it back down again. But at the moment, it's in the middle of that range, if that turns out to be a range. So yet again, I wouldn't necessarily try and trade that at the moment. There are times when it's obvious, guys, and there's times when it's not. When it's not obvious, don't trade. So we were looking for it to push up last recording date. We'll put that there again and look to see if it breaks up again. I would prefer to see it, doing something like that before going. That would be nice. I'd maybe think about trading that. But that would be that's actually counterintuitive, guys, because I'm looking for the dollar to start to weaken in a few months' time. And the CAD, the way oil price is at the minute, wouldn't be surprised if that dropped further, but I'm certainly not going to try and trade it, folks. It's too unpredictable. US Swiss, yeah, another one that's running flat. It's come up into that zone. Can it drop back down? Well, it could. Not today, but yes, Swedish. I don't trade this pair enough, guys, but I do get it right so often. Got it right from back down here. We said from here, we said it would break out. There's that little drop before breaking out. That's that same flat, and then the dollar dropped, and then off it went. We go back to DXY, you'll see it. That's back over there to see it, guys, and then it dropped, and then off it went. You'll see it in the euro the other way around. I'm trying to think what way around this. That's it there, where it dropped, and then off it came back, and then it went. Yeah, so that's it. It's January the 14th of January was the peak. Let's just make sure we're looking at the same thing. Yeah, 14th of January. So you can see that pattern throughout the dollar pairs, guys. And off it went again. And just as I'm looking for the dollar to go long, I'm looking for it to go long here. What was was it DXY that's pushed up, and then I'm looking for that in order to go. Well, what would that look like on here? Well, it would look like a zigzag then, guys, because that isn't sitting up there, it's sitting here. So if the DXY goes short, then you'll get a zigzag here, and then it'll go, and then your target would be there and beyond. But if listen, it could go long from here, guys. But if you did get that potentially would be a nice trade there, folks. I think I moved this during the week. I'm pretty sure, or over the last couple of weeks, I'm pretty sure I had that like that. And if we zoom in a little bit in that, at that time I was saying, listen, this could drop a bit further and then go. It came back to there and then went again. Now, if you got involved there, the chances are you were stopped out. When you got to there, you may have taken your profit actually. If you got in there and it got to there, you may well have taken your profit. I think what I would have said here in this situation is, guys, if you're keen on this, trade it long here, but don't put a full, position on it. And if it gets to there, put another position on. And then because it's going to go in that direction. So anyone that put on there, chances are you might have hung in, but you would have been stopped out if you took your profit, that would have been a good place to take it. Came down again. Put your alarm there. With hindsight, your alarm would have then been there. You're looking for the breakout again. And potentially as it comes up here, you can get involved. As it breaks out here, maybe you get involved there at that little pullback. And then off you go. Off to the races, guys. But it is what we were expecting. We were expecting it to break that. We're expecting it at least come back to there, at least come to there, and certainly it can break out. So it's done it. What do you do now? Well, you've got to wait for a setup, guys. You can't jump in there. If you're there, either take your profit. I would probably take that if I had traded that. I would probably take that profit. I don't like losing money that I've already made, guys. But this should correct, which would tie into looking for that correction. What was the other one? Swedish. And looking for that correction. That would tie in there. Looking for a correction on there, guys. So let's say if we get a correction. Remember, there's a Fed interest rate decision this week as well. Maybe they disappoint. And that's what gives you the correction. This is one I am in, guys. I haven't broken even yet. Or more or less, I'm a couple of dollars off on I think it's a $1,500 trade I have on this. I got in here. And the reason I got in here, guys, it's obvious. If you go back out to the daily, this looks like either a massive diagonal or a massive flat, maybe probably a diagonal. Can it be a turning point? That's the top, and then it's going that way. Well, possibly, but I don't necessarily see it. I think China's economy it's already struggling, and it will struggle with the West economy struggling, because obviously they are they produce the things that we buy. So the yuan should weaken against the dollar, particularly after it's done that. Any currency pair that's done that, unless there's some other big reason that that doesn't apply here, you would expect this at least to move back into the middle of that. It doesn't have to go all the way to the top, but it could certainly move back into the middle of that range. And then, over the next lot of weeks, months, and years, maybe do something like that, move back up towards there. But this is the dollar at full strength, and look at it against the yen. Or not the yen, guys, the yuan, the renminbi. Possibly being artificially kept strong. I did say a few weeks ago that one of the commentators or presenters on Bloomberg was doing the same as me, in that they actually came out with and said, what on earth has gone on with the dollar yuan? The US is tightening. The Chinese government are loosening. They're, stimulating their economy. And therefore, the two of them are out of kilter. You should see a move long. That's why I got involved there, guys. Now, it didn't mean that was definitely the time it's going to go out. And as you can see, and this is why you have to be patient with trading, and you have to give it room to maneuver. There's so many people out there who say, hey, impulse, pull back, you're going to get an impulse there. And then they put a big trade on there, guys, with a high leverage, and put their stop loss there. And they get beat out, they lose some money. And then when it actually happens, they've missed it, because they lose confidence, because they put so much on there. They got stopped out. They go and look somewhere else. They miss it when it goes, guys. You need to be in it, because trying to time these things is very difficult. Now, does this mean this is the start of the breakout? I don't know. All I'm saying is I'm in it, and I've read through it from here. I'm certainly not going to get out now, because I do believe that this will go long. There could be another period of consolidation here, and if there is, I might get a bit fed up with it. But you've saw over the years, anyone's been listening to me, there's so many times where I get fed up, get out of a trade, and a week later or even a day later, you get a massive impulse. Um, what I'm looking for is to get it away from zero. If I can get it away from zero, then I don't have to worry about it. And yes, there will be leverage costs, but my leverage is only 5. I used to run on 10, and years gone by when I was learning, I used to run on 20 and get battered all the time and wonder why. So we were looking for a breakout last week, 2 weeks ago. We've run flat. We've had a breakout. Now I'm looking for that to continue to push long. It could pull back, guys, but I'm looking for that. If I wasn't in it, I would look for a setup to try and trade it long. Over here, what I was looking for, well, because we'd had the impulse and because it was running like that, I said at some point it's going to break and come out. By the way, this hasn't broken out yet. This hasn't broken out yet. It's still within this structure, but I'm hoping that this is the start of the breakout. The other trades I had on, we'll talk about it in a minute. We're not there yet. Gold. Finally, gold did something after being stuck in it for nearly a year. I got out of 3 of my gold positions just because I'd been stuck in them for a year, because this hit a double top, and I broke even, guys. I made a few dollars, but I got the money back off the table and then put it into Google. And Google could, like everything else, could drop from where it is, but in 2, 3, 4, 5 years' time, Google will be higher than it is now, and that's the gamble there, as it were. That's the trade, as it were. Right, gold. It's hit a double top. It's come off. Can it go higher? It can, and that will be determined by what happens. What happens with the war, obviously, folks. Now, what's interesting about this is that this is the highest gold, if I remember rightly, and I should know with my background, it's the highest gold has ever been, guys. Obviously, I mean this last couple of years, and it hit its previous all-time high. That's how how high gold is at the minute. So I wouldn't be jumping in there, guys. If you get in here, fantastic. Unfortunately, I got in over there. If we go back to the 4 hours, I got involved over there. Now, I made money on the way up there, folks. Took it off the table, and then when we got that bit of a correction, I thought, I don't want to miss the next move up. I thought it would at least come to there and then maybe come off. And then I got stuck in it for all this time. Long as that, it's from May 2021. So it's near enough a year I was stuck in those trades for. And it's frustrating, guys. I don't like being stuck in anything that long. Not in the red. You don't mind if it's in the green and you're in it for a long term, but being stuck in the red with something is quite frustrating. Anyway, there we go. A war. Boom. Up it goes. Can it break that top and go higher? It can, but only based on the developments of the war. And, if the world economy goes into recession, that'll go higher, guys. And silver, when it was down here, do you remember I said, this is too cheap, it'll go long. Unfortunately, also with silver, I got in over here and had an even worse time with that one. Same time, isn't it? May 2021. So I'm not actually out. I got out of one position because I must have put another little position on over here. I got out of it for a break even. I'm back in the green, in the red with the other ones. But that was all about getting in at the wrong place, guys. if I had the courage to buy in down here where I suggested you guys should buy, remember we had this, and I said that's a third wave. We'll get a fourth wave, and then we'll get a fifth wave, and then it'll go long. Now, I expected the fifth wave to come down to there because that's what they do, guys. Fifth waves, most of the time, will break either the top or the bottom of the third wave. But sometimes they don't. That's what we call a truncated fifth. We got a truncated fifth. Once it broke away here, I said, okay, that's a truncated fifth. That's over. The next move will be up. And at this level, $20, well, 22, but silver's incredibly cheap at $22, that, guys. And if you want to, as a long-term hedge, $15-20 for a silver is incredibly cheap. But you'd want to have to leave it in there and not fret about it. But as it turned out, you'd only had it in there a few months and you would have been making good money. What do you do now? Well, if you're in that trade, depending on whether you're in it for a trade or whether you're in it for a long-term hedge, if you're in it for a long-term hedge, put your stop to zero or maybe push it up a little bit, protect some of the money. You could take your profit. But just like with gold, if this war continues, silver will push on up to there, and it could even break out, guys. Let's just see where we are with silver. Silver hasn't made the recovery that gold has. Yeah, silver's a long way to go before it would hit its all-time highs, guys. Yeah, it was 2011, $50 an ounce. We're at 25. It's got 100% to go, potentially. What was this? If we look at this structure, well, it's a big flat, isn't it, guys? That's what we said it was. The reason we were looking for a 5 there, because we had an ABC, guys. An A, a B, and we were looking for a C, which sometimes can be impulsive, other times it's a diagonal. This was a diagonal. We've had the C. It possibly broke the bottom over there somewhere. Maybe it just equaled it. And this is the move up. This potentially could push on up to there, guys. Now, would I jump in it today? No, there's no setup. But potentially there's more upside to this. And I should maybe be a little bit more committed to that. The reason I'm not being more committed to it is what we've been saying. We don't know how long this war is going to last, guys. But what's my gut feel? My gut feel is we're going to go into a bear market in stocks. My gut feel is we're going to go into a recession. And my gut feel is that gold and silver are going to continue to go long. But am I backing that up with trades? Not at the minute. I haven't capitulated yet, guys. Although I'm not far off capitulation. Bitcoin. Well, we've proved that Bitcoin isn't a safe haven. The one thing it hasn't done is it hasn't collapsed yet, but it certainly hasn't gone long compared to what gold and silver have done, guys, and other commodities. When it got to here, do you remember way back when we got to here, I said, let this drop. We drew 2 lines. Now, I've adjusted the lines since, guys. I tried to make them parallel. I don't know if those are parallel or not. So from there to there, I like to be as honest as possible, guys. That's the line we drew. That's the line we drew. I might have drawn it freehand, but if that's what I was trying to draw, and to almost to the exact point, that's correct, guys. So what I'm looking for in Bitcoin was that this was going to go up in a diagonal. Doesn't mean it's going to get there impulsively, guys. It could continue to bounce along and then move up and drop. But I suspect at some point in the future, Bitcoin will be there. Can I be wrong? Of course I can be wrong. This could be an impulse down your little flat before it drops again. So I'm not in Bitcoin at the minute, but I am considering converting the crypto that I do have. I've taken all the crypto off eToro, guys. It lost me, I don't know how much it was, $1,000 or something. I just thought I don't want to lose any more in this because it was throwing all of my statistics out the window. And it was just a moment of madness. Over a couple of days, I put 5 or 10 grand into crypto just at the wrong time. Was down about $1,000 on it. I thought, you know what, just take this all off. But I have crypto in it in a different account that's a private account that I'm not trading publicly. And obviously it's down, but I might convert it even at the low levels that it's at over to Bitcoin and just leave it and watch to see what happens. Ethereum, it'll do the same as Bitcoin, guys. You can see what I was thinking. Same thing, parallel, going up in a diagonal. It's dropped down again. This could well be a setup for going long. What would the impulse be? Well, sentiment would have to grow. Sentiment would have to suddenly go from war, inflation, interest rate hikes, doom and gloom to suddenly changing. I don't see it happening immediately, but would I bet that at some point in the future, Ethereum will be up there? Yes, I would. Oil, it's come off its highs, guys. But it'll stay high. Now, from my way back down here, we called it, we said it would go long. It was easy from there where it went negative. We called it long. When we got to here, I said it would probably run flat. The one thing it did say was it would not go down there. It'll not drop. And even here, we said, I think when we got there, said, listen, it'll probably run flat for a while, but it's not going to do that. So either wait for it to drop and then trade it back up, or wait for it to get there and trade it down. I don't think I suggested you do that, because we always trade with trend, guys. And that's the reason that you trade with trend. Because when you get a breakout, if you're trying to trade that way when trend's that way, unless you've been really lucky and you've caught the top of the trend and it's reversing, which you won't get right very often, you'll get it wrong badly. So always trade with trend. So when it drops, trade with trend. When it drops, trade with trend. And obviously you're not going to get it, to the exact moment or day or hour or even the week. So long as you're trading with trend, you have a high probability, even when you get it wrong, you have a high probability of getting your money back, guys. So let's say this broke out here and there's a little setup there, and you decided, right, that's it. This is going long from here. I'm getting in. And then it did that. Well, a month later, you had your money back. And 2 months later, you've doubled, well, depending on what your leverage was, etc. But 2 months later, you've got, a good profit under your belt. You hung in even longer. I would have sold out here. I would have sold out there, guys. Don't be greedy. Leave some for other people. And then it drops again. You say, okay, that's me done. And take your profit, regardless of where you got into it down here. Now, the last time we looked at this, we were over here. There's the alarm there, guys. We were over here, and this had just set up. We're in the 4 hours. Let's get down to the 1 hour. This is where we were. And I said, listen, this is going to continue to go long. Obviously, the first target would be there. But it then depends on where you get into it. You get a pullback. Do you wait for a deeper pullback before you go? Or what do you do? Now, that was our initial target there, $100 a barrel. It bombed through it, came back, guys, bombed through it again. We weren't to know back down here that there was going to be a war, by the way. But I was looking for that to break out long and hit $100. Were we here? I can remember this. Need to start doing these more regular basis. The problem is that when it's 2 weeks ago, guys, I can't remember what I was saying. But what I do know is trend was long. Has it peaked? probably peaked. It'll run flat from here. I wouldn't try and trade it long, guys. It can go long again. There are people calling it, the 185 or something like that, but I think demand would drop off way before that. People already aren't traveling the way they were. There's a war on, inflation's hitting the roof. COVID's still around, by the way, even though no one's talking about it, although we don't have the same levels of death. We are coming out of the winter, so there won't be as much demand for heating in the northern hemisphere, which is where most of the population is. So I'm no oil expert, guys, but I wouldn't. I certainly wouldn't try and trade it up at this stage. Can it go? Yes, it can. But for me, it's getting into very risky territory. What would push it higher? Lack of supply. The whole Russian thing might push it higher. But back here, for me, it was obvious. $100 a barrel. Yeah, it was certainly on the cards. Is $150 a barrel on the cards? I don't know. You start to break down demand then, don't you? I mean, it has peaked. Let's just put that in as a potential target. But not for me. Let's now stop trading oil back here. We're bought into it at $20 a barrel. There's where we bought it, $18, $19 a barrel. And within 24 hours, lost it because it went below zero. I had a stop loss below zero. Not below, obviously can't below zero, but at no stop loss. I put it, zero. It can't go below zero. Well, it did. So I thought there, it was one of those, you can't lose this bet. I did. So I stopped trading it. And it was obvious it was going to climb back up again, but it was a bit expensive to trade. Anyway, the important thing for oil for me, isn't about trading it. It's about what it does for the economies that produce it. So obviously the dollar, the CAD, the Norwegian krona, I don't trade it, too expensive to trade. What else gains? By Venezuela, a place like that, obviously Nigeria. But particularly the CAD for me will stay strong if oil stays at those sorts of levels, guys. And gold and silver and nickel and palladium. Not sure if they produce nickel or not, but I'm sure they do to some degree. Okay, let's get on to the euro. Obviously, the euro is all the opposite of DXY, guys, so I'll not go through it. Euro CAD, well, we were looking for the breakout and run short. We drew that little thing. This is on a daily time scale. Let's get into the 1 hour and you'll see what we drew that a few weeks ago. The point it was making there was saying that this isn't a setup to go long. This is the start of a what was it we used to call those? A leading diagonal, guys, and then it'll do that. And I was kind of indicating that would be your target there. Well, it bombed through it, come back, it's down there again. Maybe they all start running flat now, guys. Euro Oz, I traded this, guys, made a little bit of money out of it, but as it dropped here again, I was giving it back. It did this, and as it broke out there, I got involved in it and held on to it for a week or so, and then it did this, and I thought at this point it was going to go longer, so I stayed in, and then within 2 or 3 hours it had done that, and I just thought, okay, I'm out. But it could be one of those, guys. I just don't like going back to zero when you're up. I was up 7 or 8% on the trade, and I don't like going back to zero from there. So it came back down to about 3% or something. I'm just taking it, but potentially This, and the reason I got involved in that, as I said, this is overdone. This is ridiculously oversold, guys. So do I think it's going up there? No, but it certainly could, bounce along in here, guys. And I don't know if it's going to go that high, but it could, it could bounce along. And if it does that, and you're brave, each time it drops, if you bought into it, drops, buy into it. But it is a brave one, guys, because we don't know what's going to happen with the war. If the war did escalate, if something happened between Poland and Russia, which is possibly where, if it's going to ever escalate, that's possibly where it's going to happen, because I think the armament supplies to the Ukrainians and the food, etc., is mainly pouring through Poland. So if the Russians were to attack, you know, that area, that could be the start of something, and NATO would have to get involved, guys. But that's a big if and a big but. So there are risks at the minute of trading with this war on, but I think that's way oversold, guys. And I think the worst case, I think the worst case scenario for this is that it bounces along like that, with with a positive trend. Um, but we're talking about weeks and months, guys. We're not talking about next week or tomorrow, Monday. We're talking about weeks and months. A bit like, do you remember we traded the CAD Swiss? I think that's CAD Swiss. Yeah, CAD Swiss. And we'll go back to the 4 hour. Sorry, I accidentally paused you there. Hope you didn't notice. Hope it's still running. I mean, do you remember this? When the CAD dropped like a stone. Do you remember our old pal who was 100% long on this through here? I've forgotten his name, folks. He had 42 trades on. And even when it was doing this, he just wasn't paying attention. And he lost the heap. And he had a lot of followers, and he lost them all. I reckon he had about, I think at the time I thought it was about $670,000 he had trading. But anyway, he disappeared eventually. You don't put all your eggs in one basket. Anyway, do you remember it dropped like a stone? When it got to here, I decided that was it. It hit the bottom and was going to trade up from there. But then it gapped down, and we got to here. And once it settled out, I think around there, that's possibly it. I said, well, this has to go long from here. And as you say, it did go long, and it went long in a diagonal. And how we started trading this was, and this actually changed my trading strategy. Just started putting small trades on, guys, with big stop losses, way down here somewhere. Therefore, you're not getting as much, return on each trade, but just trading it. And when it dropped, trading it. When it dropped, trading it. And the problem was, each time it came up, I was taking the profit. And when it came up that time, I took my profit and then missed the move. But the point of it is that it was always going to continue to go up. And way back then, I got that wrong. But from then on, I had 100% correct on this, right up until last week. In fact, I think it was Wednesday or Thursday or something. When we saw this, I said this is going to break out long. And somewhere in here, I got a couple of trades on this, expecting this to break out, because we're in a big flat, and it had dropped and it had come up, and I thought, okay, we are in the middle of it. And I usually say don't trade in the middle. Either take it from the bottom or take it from the top, depending on what the trend is. If you think it's going to break out eventually long, then take it from the bottom and trade long. If you think it's going to break out short, then take it from the top and trade down. Don't get involved in the middle. The reason I got involved in the middle was, guys, that for me was an impulse. This was a correction. The next move is going to be to there. So I got involved. I'll clean that up for us. And I know this is long, folks, but if you're new, this is good stuff. And if you're just here for something specific, you'll have already found it and you'll be away, guys. But let's clean this up and we'll just show you the reason I got involved in this and what happened with the trade. Okay. So I don't know exactly where I get in. It was somewhere in here, guys. And it dropped, but I stuck in because I said it's a correction. And up it came, and I almost broke even. It might have just been a little bit of red, and it dropped again, come up and dropped. I just stuck in there, guys. And then at some point it got up to there and started to drop again, and I just got tired of it. And the stocks were all getting battered. Now I don't want to lose more money here, and I got out of it for, I don't know, $20 loss or something, no big deal. But then I missed that. And for me, that potentially, I know that it's come up into there and you wouldn't want to get involved there. But from down here, put your stop loss to zero if you got involved down there, and then see where this goes, because potentially this could break out and go even further. The reason I chickened out of it was because the gold price was going up so much. And as you know, the Swiss, I'd have preferred to have traded against the yen, which is what I should have done. I should have traded against the yen. But anyway, it's broken out. What next? Well, for me, I'll be looking for a setup on it. Possibly, we'll see what happens. If it does something like that, I'll look to see if I can trade it long. With the eye that it could come deeper before pushing on up. But I'm looking for this to come back up into there, guys. And I've missed a few things out. Let's just go back through. Euro CAD, Euro Oz, that was what we were talking about. Euro New Zealand's done the same thing. There's where we were 2 weeks ago, guys. And I said, this is going to break short. I don't know if there's no setup in there. So I would have been saying, well, if you're in it, it's going to break short. And what a lovely trade that was. I don't count pips, guys, but, you know, many I was near 5.5%, guys, with a bit of leverage. Times 10 leverage is 50%. Times 5 leverage, 25%. Not bad for a couple of weeks. Okay, so I think this will move long. I'm not expecting it to go way up there, but it could certainly, do something like that, guys. Euro yen, same thing, just got oversold, guys. But yet again, we were looking for it to break out. We were looking for it to go short. Yet again, potentially, it's not going up there. Could run flat in there. Euro CAD, Euro Swiss, same thing, way oversold. Yet again, we were looking for it. Can it drop again? It can, guys. So if you're going to try and trade this, you're going to have to, I would trade this, and I don't know that I would, but if I were going to trade it, and I may, depending on what's happening on what particular day, but if you were going to trade this, you'd have to let that alarm go off. The danger is you're back up to them that could come off there again. Maybe you steepen your line a little bit, give yourself a chance. Try and get into it before it gets to there. As it comes up there. And then and I would trade this with a tight stop. So if you're wrong and it goes, then you're out of it. And the reason I say that is we don't know what's going to happen with the war, and therefore potentially this could take another dive. So you don't want to get into there with a big wide stop loss and let that run and run and run. So pound CAD, we said it would drop. It's dropped. What's going to happen next? Potentially there's upside to it. But yet again, at this point in time, I'm not going to call it long. I don't know why I drew that. I was just thinking down the line it potentially do that. Potentially a little bit of running flat, guys. Same thing. To see where that's running, I'm kind of thinking maybe it runs flat and then eventually coming along. New Zealand, same thing. Maybe it runs flat. Don't see anything here to trade. Other than, guys, you could maybe look at this in 6 or 7 or 8 months' time, and it's away up here somewhere, and you go, "Oh, that was the turning point." I would let it develop a little bit more, and maybe show a little bit, and then if you get a setup, you know, try and trade it up. Pound Swiss, same thing. Not looking to trade it down, but potentially there's more downside to it. I'd prefer to look for a trade long, but I don't see it yet. Pound Euro, there's potentially upside to this one, guys. Particularly if the interest rates get hiked. You know, you could see this coming up, and maybe it ends up running flat, but from here, maybe a bit of upside on it. Pound yen, yet again, maybe a little bit oversold, but we were looking for it from there. Problem is, if you got it in there, you would have been stopped out for a zero, guys. And then it went, but that's okay because that's trade and that's what it has. Sometimes that happens, you know. In fact, not sometimes, happens a lot. So I could potentially see a bit more downside to this, you know, something like that, and then pushes up. Doesn't have to. It could push long from here. I'd be happier maybe trading it long from there. And then Aussie yen. I think I just threw this out of the way the other week because I wasn't entirely sure. The Aussie has strengthened up. From here, you would have to see something like that and potentially more upside. It's a little bit tight up to there. This is kind of its ceiling, its recent ceiling, so it's not a great place to be getting involved. You could put a zone in there. Not a great place to get involved, guys. You would have to drop. Is there a trade short? Well, if things got really bad, no, I don't see it. Commodity price would have to start coming off for me to trade against the Aussie, guys. So keep an eye on commodity prices. If they start dropping, then maybe you trade against the Aussie. I love trading this pair. I traded it through here and chickened out and then missed all of that, even though when we were trading through here, I kind of drew that. I said this will go long, but it will go long in a long, laborious, and I got bored in here, guys, and then away it went. It's kind of running flat at the minute. Last time when we were here, I drew a zigzag. I said if it gets down into there, it'd be interesting trading it long. Well, it got there via a roundabout route. In other words, it wasn't a zigzag, it turned into a flat. It's broken the bottom and it started to move long. This will potentially push on up and break out there, guys. It's something that I might consider trading. Aussie Swiss, yet again, I wasn't entirely sure about this, but I had the alarm on there, so I must have been thinking about it pushing up. It's pushed on up. Look, there could be downside to this, guys, and then maybe you look to trade it on up, but I would leave that alone for now. We've kind of missed that big move on the Aussie. This one, I never know anything about it, guys. It's moved way against the CAD. I think there's more chance of oil staying high than there is of gold staying high, unless we're going to go into a recession caused by the high oil price. So it's difficult to tell. Maybe there's more downside to it. You could possibly fib it and look to trade it down. We're on the 4 hours. I don't see a setup on it at the minute. It could be an ABC, guys. So I'd be very careful about trading this down short. Oh no, it's not an ABC. Well, ABC as in a zigzag, but it could be dead. If it's going to turn into a bigger move short, then it could well be just a big extended zigzag, a double or treble zigzag. So if it were to get to there and then break, maybe you try and trade it down. I wouldn't like to try and trade it long from here. Swiss yen is becoming another one of my favourites. I haven't been that successful at trading it. Remember, I was trying to trade it long in here. No, short. I was trying to trade it. Oh, no, it was way back here. No. Let me go out. Yeah, it was here. There, see the arrow? I was trying to trade it short in there. And then it come up, stopped me out. I think it was for a zero. I don't think I lost any money on it. But when it broke there, I can remember saying, guys, this is going long. And everybody was trading it short. I say everybody, I mean, when you go and look at eToro, it lets you know what percentage of people are trading in which direction. Never trade the way because of what it says there, guys. Trade because of what you've decided you want it to go. Ignore the sentiment on eToro or any site that shows you sentiment, guys. Ignore it. But the sentiment was it was something like 80 or 90% of people were trading it short. And I remember saying to you guys, don't trade this short. Don't necessarily trade it long, but do not trade it short from here. Breakout, lovely little setup, lovely little flag. You'll not see a nicer flag than that, guys. And away it went. Now, then there was that. Probably would have taken you out unless you took profit up here or trailed your stop. Then with a little flat, which was horrible because it kept looking like it wanted to give us the other side of that. And you would have been looking for it either there or even here. And I'm sure that I would have drawn that, guys. And then said from there, trade it up. Look, when it came a long, long way. Down, flat, out it came, and off it went. You need to be patient, guys. It happens. So it didn't happen there where I was looking for it. It happened over there, but it did happen. And then off it went. That was a fantastic trade. And then here, yet again, when we were in there, I was wary because I said, listen, this could be another zigzag down into there, and then off you go again. Didn't happen. Took off from there. So yet again, this is one that you would have missed. Well, I missed because I was looking for the drop. And you've got to look for that, guys, because you can't go by the one or two times that it didn't happen. You've got to go by the majority of the time that it does happen. And the majority of the time, when you get an impulsive correction, it'll turn into a zigzag. Impulsive correction, you get the other side of it. That's relatively impulse. See, beautiful 1, 2, 3, 4, 5, guys. Comes down. Now, if you looked at it closely, there's probably a zigzag in there, and it turned out that was it. But as it developed here, it just looked so much more like that. I said, okay, this is going to drop, and then it'll go. You don't trade it down. There's the point where you start to think about trading it long, and then you'll have your alarm line across there. And as it breaks, that's your signal to get involved, guys. Have a system. If you don't have a system, you're chasing your tail and you'll get it wrong. What's happening now? Don't know, but I certainly wouldn't like to trade, up there. It can go up there. It's with trend. But yet again, we've had a move down there. We've had a zigzag down there. Maybe that zigzag's showing us something that it's going to continue to go long. And I assumed that was an impulse. I still think it is an impulse, guys. This is where you've got to go in. What I'm doing here is a big overview, giving you my views on a higher time scale and of where things should go in general. But in your trading, you've got to go in and have a look, guys. It looks pretty impulsive to me. So 1, 2, 3, 4. 5, you could possibly say a 6. And if you want to go into that in great detail, it's a diagonal, guys. 1, 2, 3, 1. No, it's more impulsive than a diagonal. That was the view I had of it, which is the reason why I expected it to drop. But it didn't matter, because it doesn't matter what you miss. What matters is what you get right and what you get wrong with your own money, what you put your money into. That's the trade that matters. Doesn't matter if you miss a trade, guys. It's when you put your money into something, you've got it wrong. That's when it matters. Okay. CAD we've discussed. I think it'll pull back. I think it'll push on up. CAD yen. Knew that would be the better trade. I was looking for it to maybe drop a little bit more, but I was certainly interested in it. Didn't drop the extra little bit. It's pushed on up. What now? Well, you got to look for this to pull back again, guys. Maybe it ends up just running flat here, but I would certainly say, let's put a. It certainly wouldn't be surprised if it reached there. New Zealand against the yen, pushed on up, same as the Aussie did. What next? Well, you'd have to look for something like that, maybe to give you a setup to push on up. If the war ends, that'll push longer, by the way, guys. Or if the war just becomes something that the rest of the world's not worried about, or they get used to it. New Zealand CAD. Maybe this is the other way around, guys. I'm not sure. I'm not going to try and trade it. But it is possible that this is some sort of diagonal running here. And it's at the top. That's why I'm saying don't try and trade. It can go long from here, but I wouldn't try and trade from there, guys. Down there was a place to trade. Potentially there. Although having said that, you would have been trading in the wrong direction. So for me, this potentially pushes down to here. And then from there, you'll worry about it. And if you're going to try and trade that, put a tight stop, guys. You don't want it to do that on you. And then New Zealand Swiss, same thing. Not same thing. It's same thing as with the New Zealand or the yen. We were looking for it to hit that target. Hit the target, it's broken out. I would look for a correction now, and when we get a correction, then we'll decide what to do. I wouldn't necessarily want to try and trade it down. US ruble, just out of interest. Guys, that doesn't look like much until you do this. And then look. It's just incredible. Now, obviously, I didn't trade it. or I probably would have made a few bob if I traded that. And I don't know what the fees would have been to trade it, what the spread would have been. It would have been ridiculous. But anybody who was along this before the war happened, anyone that saw the war coming, and you got in here somewhere, wow. But yet again, the chances are when it went to there, you would have got out, or went to there, you would have got out. You wouldn't have got it all the way up, guys. So what now? Well, this is the new reality. This is where the ruble's going to stay for a long time, folks, and it could push on up higher, but potentially flat, as in it'll jump around here. But that's the new reality of the ruble. And then South African rand, just out of interest, I pulled it up. Wasn't as significant as I thought. I thought I would have saw a more impulsive move here, but it has moved long against the US dollar when everything else is going short against the dollar. This has been going long. So the reason this isn't impulsive is because the strength of the dollar. But you know, it would be really interesting, and let's just do it. And this will be the last thing for the day, guys. Um, let's see if we can pull up this. Yeah, see the more impulsive move there. I was looking for this to go long. Do you remember way back? I used to trade this, and I got it horribly wrong, guys. I have a wee love affair with the South African rand because I made, you know, my fortune, as it were, in South African rand 20 odd years ago. A fortune that I've since spent, and, you know, it got me on the road to becoming independent, folks. Um, yeah, there's potentially more downside to this, but yet again, it all depends on the war. You wouldn't want to jump in short there. But it is interesting. We'll just pull that up for interest sake. I can't remember why I stopped trading. I think it was too expensive to trade. There was a reason why I stopped trading it, folks. Okay, guys, that's kind of a little summary of what's happened the last couple of weeks, what I think will happen in the next few weeks. There's a big if in the middle of it, and that's the war. If the war went away, we could look at interest rates, we could look at GDP, we could look at, the figures coming out of the United States and trade it that way. But because of the war, it just exaggerates everything, and we don't know from one day to the next what's going to happen. But there should be opportunities to trade the euro long, but you got to keep an eye on the news, and it is a gamble. So keep your stops tight, guys. And I'll try and do these more often, guys. And I know I've been slacking recently, but it's because I've been so focused on the 95% or whatever it is of my account that's in stocks, trying to short it up a little bit and take little bits of profits off the table and reinvest at better prices. But it is a good time to be trading currency, so I will focus more on it. And thanks to Robert, if you're still listening, for rattling my cage and getting me back into it. Okay, bye for now. I'll speak to you probably midweek. Bye, guys. Bye for now.